Well, for more, we're joined by Nadia Elbilassy in Dubai. She's Equiti Group Senior Market Analyst. Hello again, Nadia. OpenAI missed its revenue and user growth targets despite billions in investment. Is the so-called AI halo finally slipping, and are competitors like Anthropic now a legitimate threat to their dominance?
Right. Hello. Yes, competition is a very interesting or key point in this issue that we have right now, with earnings not matching the forecasts or the revenue expectations. We have now a case of mismatch between adaptation and monetization, and this is why investors are getting a little bit worried. But that doesn't mean that the tech rally will stop. We are still seeing high valuations, and maybe even too high of valuations, and that's why a lot of investors think that the bubble will collapse soon. But so far, we still don't have an issue with demand, especially on AI. On the contrary, we have higher demand now with even higher competition.
Yes, and just on that, we're seeing tech optimism take a bit of a battering as investors pivot from hype to hard results. Is this a healthy market correction, do you think, or the beginning of a longer-term repricing for the AI sector?
If we look at the data, we still have the tech sector really making the gains that they should. Earnings are still very high, even if there was a bit of drop from the forecasts or the expectations that we have. We are still much higher than last year and the year before that. So I think that the path here is that we are still on an upward trend in terms of AI demand, AI valuation, AI returns. But the issue here is sustainability of whether this is likely to continue even after facing all this market uncertainty, especially amid geopolitical fears. We do have the fear that when will this end? This is a question rhetorically asked by the markets all the time. However, the tech rally still proves that it's still strong. We still have major indices at record highs. We see short-term corrections here and there, but actually we're still on an upward trend.
Now, with the US Fed meeting today and a leadership change to Kevin Warsh on the horizon, do you think Jerome Powell might deliver a hawkish parting shot, or will he hold steady despite this war-driven inflation?
I think this meeting is very important because it may be the meeting of Powell's last statement before Kevin Warsh is appointed. So it's a very important meeting. I do think that they're going to hold rates this meeting, just because inflation now, we don't really have the full transparency of whether it is that high because of the energy shock, or will this actually likely be the inflation numbers till the end of the year. We have mixed expectations between inflation going to 3.3%, 3.8%. So it's between these levels. However, if it draws back to the 3.3 area, then we might see that they will continue easing. So now it's a question. We have two options on the table. We have hike expectations and we have rate cut expectations, and different banks are saying opposing factors.
Okay, Nadia Elbilassy, really good to get your analysis as always. Thank you.